And happy Monday, everyone. Glad that you are here with us. John Jenkinson here, along with Mr. Rich Nelson, Allendale Incorporated in McHenry, Illinois. Good morning, Rich. Well, a little bit of precipitation moving across parts of the wheat belt over the weekend. Grains on the overnight, a little bit higher, but still pretty quiet last night on the overnight trade.
Certainly was. I think a lot of people looking forward to this next week of clear skies or clearing skies, and maybe getting a chance to focus on some planting numbers here these really next few days. I think will be a big deal for us here.
It'll be interesting to see what the latest crop conditions report. That'll be out this afternoon at 3 p.m. Central Time. We'll have more details on that. But I searched high and low this morning, didn't find any traces of any overnight trades again.
I think that's certainly true here right now. So a few more days since the last overnight sale on both corn and soybeans. So on this one, looks like the market didn't have a whole lot of brand new news to go on here, at least for this morning's discussion.
Let's take a look at the overnight trade. We mentioned that. Start here in the corn market. We were anywhere from a penny to a penny and a quarter higher on the overnight trade. This morning we've got May corn going into the day trade 1 cent higher, 377.5. New crop December corn up 403.5. I want to stop here and pause here for just a moment, get your thoughts. You know, last week we kind of dipped below that 60-day moving average. So now we've got a lot of different things coming at this market. We've got the progress of planting that we'll be watching very, very closely. Of course, the weather forecast, a little bit of weakness here on the charts. What's this corn market setting up for maybe when we roll the calendar in May? Could there be some more volatility maybe?
Yeah, I certainly think there could be here. And on a seasonal basis, usually once we do get some planting done, yes, we do usually have a little price pressure. So I wouldn't be surprised if we have a small little dip here in the spring as we are now kind of changing the narrative among many in the industry where we actually will be planting here these next few days and on a very active basis. So I think that might add maybe a little pressure here as we go into May here for the next few days here.
Last night on the overnight trade for the soybean side of what was going on, we were again just about a penny to a penny and 3/4 cents higher. May soybeans up 1 3/4, 10.30.5 on the overnight. July up 1 1/2 at 10.41 3/4. New crop November soybeans up 1 1/2 at 10.36.5. Soybean market again here on the overnight trade a little bit higher, but still very, very quiet.
Exactly right here. And also, people were kind of paying attention to Thursday and Friday's trade. We did have that gap, which was open at lower prices, and on the November contract, that was in many cases, I believe that was all the way up to 10.35.5. So once we actually filled that gap here on that Thursday move, and Friday, same type of story. We stayed right around that place. I think a lot of people will be using that as a general barometer right now for this soybean trade. That 10.35.5 for the November contract.
This morning, May Chicago wheat up 2 3/4, 466. July up 2 1/4 at 479.5. July Kansas City wheat up 4 3/4, 506 3/4. The Minneapolis wheat market for July steady and unchanged, 605 3/4. Cotton starting off with a little bit of a higher trend. May up 68, 86.15. December up 23, 79.66. And when we come back, we'll continue our conversation with Rich Nelson, talk about the livestock and that cattle on feed report that was out Friday. Next here on the Market Day Report. Rich Nelson, Allendale Incorporated here joining us, and going into that cattle on feed report, we had some estimates. Basically, the range of estimates was relatively narrow going into the cattle on feed that was released on Tuesday afternoon. So the actuals came out. There just really wasn't much to write home about, was there?
You know, for the most part, no big surprises here. The nation's placements did fall, of course, which was expected, but really didn't fall almost as much. In fact, the number they came out with for March placements, 90.7, pretty much right within the trade's average guess here, 89 and change or so. So no big surprises on this one. I think for today's trade, let's pay attention to this next wave of extra supplies we have lined up, but also countering that, we did have generally better than expected trade here for last week's cash cattle discussion.
Let's go back and recap where we finished up with the live cattle on Friday. This was an interesting market. That front month of April down 35 at 119 even. June up 23 at 103.95. August was unchanged, 103.80. I want to stop here for just a moment. That June live cattle contract, 103.95. Well, you compare that to where we traded cash last week. Some of that cash cattle trade $4 higher in the south at 121 to 122. On the dressed basis in the north for that cattle trade, $5 higher at 190 to 195. So Well, something's got to give here pretty soon, doesn't it, Rich?
Certainly right. The market has readjusted its viewpoint on how much this cash cattle trade will fall in the month of May and June. We do know we got extra supplies lined up during that time frame, but on a positive basis, at least April is going to slip by without any major supply issues. So yes, we are reconfiguring exactly how low we're thinking this market will be seen here. But on a positive basis, Friday's cattle and feed report said that third quarter is when we're going to have a change in supply to the positive end. So yes, we've got bearish numbers to deal with up ahead, but gosh darn, just a few months from now, we'll be talking better times here.
As far as the feeder cattle market, and there's a market that was also finishing the day Friday a little bit stronger. So today, getting off to this feeder cattle market, how closely will it be watching some of these outsides like the corn market and some of the inputs?
I actually think it'll be watching very closely because keep in mind as we have this 145 and so trade here on this feeder cattle end, that's implying there's break evens for finished cash cattle up in that lower 120s, upper teens. So that's still a concern here as none of these futures are really implying we're going to have that type of rebound in price. So I think they will be very closely watching this corn market. Certainly, no doubt there.
Hog market finished on Friday a little bit weaker as well, and kind of going into the close, did find a little bit of firmness, but still this cash hog trade seems to be holding rather firm at this point.
Certainly is, and it's been very, very impressive on how well this market has done. You know, we had this 9-10 weeks in a row of straight losses, so now that's been corrected. We've got 2 weeks in a row now of gains, so very positive side of things suggests we've finally got the low end, and we're still looking ahead towards better conditions up ahead, especially with this changing weather as well.
Rich Nelson, Allendale Incorporated here with us. Let's find out where the cutouts finished on Friday as well, both the beef and the pork cutouts. They were both actually stronger. The beef cutouts on that choice up 64 cents at $211.98. The selects up $1.65 at $200.13. For the pork cutouts, however, everything was weaker. The carcasses, loins, hams, and bellies all lower, with the bellies dropping $1.47 at $90.02. Janet.